Good morning, students. In the last video class, we know about banking theory and practice. So, features, definition, meaning, definition, features. So, primary functions. So, let us continue in this video class. Secondary functions. In addition to primary functions, all the banks will perform like this general utility services also. Here, issuing letter of credit and travelers checks, underwriting of shares, debentures, safekeeping of valuables in safe deposit lockers, underwriting loans floated by government and public bodies, supplying trade information and statistical customers, acting as a referee regarding the financial status, undertaking foreign exchange business. So these are the general utility services performed by the banks. So especially all the banks providing customers locker facility and traveler checks, and at the same time shares, issuing of shares and debentures, and collecting dividends and interest. So bank performing as a mediator to the customers and providing lockers. So these are the general utility services. Next we see role of banks in economic development. So banks also perform in economic development in a nation. So a proper financial sector is of special importance for the economic growth of developing and underdeveloped countries. The commercial banking sector, which performs one of the backbones of the financial sector, should be well organized and efficient for the growth dynamics of a growing economy. The importance of sound system of commercial banking for a developing country may be depicted as follows. So all the banks also performing economic development duties. So we see in capital formation. In capital formation, all the banks will perform duties. So like this, the rate of savings is generally low in underdeveloped economy due to the existence of deep-rooted poverty and among the people. Even the potential savings of the country cannot be realized due to lack of adequate banking facilities in the country. To mobilize dormant savings and to make them available to the entrepreneurs for productive purposes, the development of a sound system of commercial banking is essential for a developing economy. So all the banks primary duty is collecting deposits in terms of money. So whatever the money is collected, after collecting the money, that collected money is invested in somewhere, that is in diversified manner. So in forming capital formation, all the banks will lead active role. So banks providing loans to needy organizations. So that's the reason why to establish new business establishments or to perform new societies. So like that, banks providing capital to the business organizations. So that's why we can say capital formation is done by banks. So that's why due to this capital formation, new establishment will come, new employment will be generated, and new productivity is increased. So like that we have various advantages for this development. So monetization. An underdeveloped economy is characterized by the existence of a large no monetized sector, particularly in the backward and inaccessible areas of the country. The banks, by opening branches in rural and backward areas, can promote the process of monetization in the economy. So in monetization, the banks perform a active role. So generally there will be a difference between rural and urban areas. So when banks are established in rural areas, the flow of money will continue from rural areas to urban areas. So this will affect by establishing the branches only. So that's why wherever the backward areas, underdeveloped areas, that areas are promoted by monetization, by establishing this bank bank activities. So that's why banks also will lead in economic development. And one more, next one, innovations. Innovations are essential prerequisites for economic progress. These innovations are mostly financed by bank credit in the development countries, but the entrepreneurs in underdeveloped countries cannot bring about these innovations for lack of bank credit in an adequate measure. The bank should therefore pay special attention to the financing of business innovations by providing adequate and cheap credit to entrepreneurs. So innovations are needed. So in olden days we don't know what is a bank, we don't know what is the ATM centers. So like that we have various innovations established by banks. So sophisticated equipments, sophisticated developments are done by banks only. So this sophisticated development lead economic development. So that's why innovation is needed. And next one, finance for priority sectors. So priority sectors will be given preference by banks. So that's why the commercial banks in underdeveloped countries generally hesitate in extending financial accommodation to such sectors as agriculture and small scale industries on account of the risk involved therein. They mostly extend credit to trade and commerce, where the risk involved is far less. But for the development of these countries, it is essential that the banks take risk in extending credit facilities to the priority sectors such as agriculture and small scale industries. So India is based most of the people based depending upon the agriculture only, and unorganized sectors. So that's why small scale industries, medium scale industries and agriculture industries are to be given importance, because they have to develop most of the people depending upon these sectors only. So that's why in Indian plans also, agriculture, industries and the service sectors also given importance. So that's why finance is to be given where is importance. So that's why agriculture and the small scale industries are to be given most priority sectors. So that's why finance are to be provided to the priority sections, where most of the people depending upon the depending upon their lives. So that's why finance is to be given to the priority sectors by the banks. So next one, provision for medium and long term finance. Provision for medium and long term finance. The commercial banks in underdeveloped countries invariably give loans and advances for a short period. They generally hesitate to extend medium and long term loans to businessmen. As is well known, the new business need medium long term loans for their proper establishment. So generally there will be a risk when providing long term finance and medium term finance. So that's why all the banks or other sector people may hesitate to give loans, but here underdeveloped countries definitely is to be given importance. Underdeveloped areas, backward areas are to be given importance. So that's why commercial banks, underdeveloped countries and regionally backward areas and below poverty line people will be given importance for short term period of time loans and advances. But whereas new establishments and new business people, medium and long term loans also is to be given. So here in this case all the banks are provided short term, medium term and long term finances by the banks. So that's why then all the business establishments, may be small and big, whatever it is, all the business establishment will lead to develop to the nation, economic development. So that is the importance given here. Next, money policy. Here commercial banks is an underdeveloped economy should follow chief money policy to stimulate economic activities or to meet the threat of business recession. In fact, chief money policy is the only policy which can help promote the economic growth of an underdeveloped country. It is heartening to note that recently of commercial banks have reduced their lending interest rates considerably. So RBI and SEBI in association with the central government in association with the RBI, money policy will be taken. So this money policy taken, all the commercial banks are to be followed to stimulate economic activities in rural areas, in business areas and backward areas, and where the needy persons are there, needy organizations are there. So that's why rate of interest is to be reduced considerably. So that's why this is the money policy system. So this is given by RBI from time to time. According to the RBI guidelines, the banks follow. So that's why a bank rate of interest will be reduced and increased according to the guidelines of the RBI. So that is the money policy. Last one, need for sound banking system. A sound system of commercial banking is an essential prerequisite for the economic development of a backward country. So sound banking system is needed for economic development of a backward country or developing country or needed country. So whatever it is, a sound banking system is needed for establishment of poor people below poverty line, to avoid regional imbalances. So like that we have various perquisites, so that's why we need a sound banking system. Next we see core banking. Core banking is a term used to describe the services offered by a group of interconnected bank branches. Bank customers may access their funds and other transactions from any of the member branch office. Core banking solutions. So here core banking solutions is nothing but CBS is a procedure which is realized in a centralized environment, under which the data pertaining to the customer's account, financial dealings, profession, family members, income, etc. is stored in the central server of the bank instead of the branch server. This task is accomplished through advanced software by using the services provided by specialized agencies. Core banking is the nerve center of banking operations. In core banking, customer of a specified branch of a particular area is a customer of the entire bank, spreading its branch network across the world. Due to its benefit, a number of banks in India in recent years have taken steps to implement the core banking solutions with a view of building cordial relationship with the customers based on the information available according to their need. Offers customized financial products to the customers. Here core banking means core banking solutions here to give better services to the customer. Here this system is established for to give better services to the customer. So if any customer is opened a bank account in a branch, that information is not restricted to that branch only. That information is kept throughout the world through branch servers. So that's why customer can activate or do their transactions throughout the world with the help of this core banking solutions. So if there is no core banking solutions, the customer is restricted to do their activity in branch only. But here all the banks providing more and more services to the customers. If non-banking customers also providing services, so that's why that is not possible. When it is possible, when core banking solutions is implemented, then only it is possible. So that's why this core banking solutions service is provided, giving to the customers to connect interconnected branches also. A group of interconnected branches are connected through these solutions. So that's why it is computer operated system. This software works throughout the world. Then this is the central working system for banking operations. So whatever the bank, the customer may go and do their operations, do their activities. So that is the system of core banking system. So a customer can operate their transactions from anywhere, not from the branch, anywhere. They can deposit, they can withdraw, they can transfer from one account to another account. So like that we have various activities are to be performed by the customer from anywhere. The advantages: the process is beneficial both the customers and the banks in the following ways. Customers, how it is beneficial to the customers. How it is beneficial to the customers, let us see. How it is beneficial to the customers, let us see. Transactions of business from any branch. Being a customer, being a customer being a customer, the, the transaction of business with the bank from any branch, from any place, can be performed. Less number of errors, therefore higher accuracy in transaction, because all the machine operated activities are done. So that's why less accuracy, higher accuracy, and less errors will be performed. Better funds management due to immediate availability of funds. So these are the benefits to the customer from the branch. These are the benefits to the customers. So let us see what are the benefits to the banks. Standardized process are to be followed by the banks. Standard operating system is followed. This standard operating system is performed to all the customers by all the banks. So a common standardized procedure are to be followed by the banks. So that is a benefit to the banks. Next, better customer services, which leads to customer retention and increased customer dealings. So when better services are to be provided to the customers, then only customer retention is there. Otherwise, and one more thing, customer dealings are to be increased. Customers dealings are to be increased. So when banks are providing better customer services only, then retention is possible, customer retention is possible. At the same time, more customers will come, and more dealings also will be increased. So these are the ultimate benefits to the banks. So without customer there is no banks, because the primary duty is performed by the banks. From the customers, deposits are collected. So that's why better services are to be improved to the customers. So that's why better services are to be provided by the banks. That is a duty and a responsibility of the banks. So that's why because of this CBS system, CBS process, banks will provide a better services to the customers. Availability of exact and precise data, and better use of available infrastructure, better management information system, and reporting and external agencies such as government, RBI, increased business value with the better asset liability management. So these are possible by core banking solutions. Core banking solutions, right? Next, so here we have latest developments. Of course not now latest, it is recent days, recent past, it is started. Here we have one better service to the customers, are provided by the banks. Let us see, that is real-time gross settlement. What it is? RTGS. This RTGS services are provided by the banks to the customers. So let us see what is RTGS. Real-time gross settlement. This is one type of service is provided to the bank, provided by the banks to the customers. According to RBI, RTGS can be defined as a continuous. Continuous means 24 by 7. That is real time. Settlement of funds transfers individually on an order by order basis without netting. This happens through the secure net InfliNet provided by IDRBT, an initiative Reserve Bank of India for research in banking technology, considering that the fund settlement takes place in the books of the Reserve Bank of India. The payments are final and irrecoverable. The RTGS system is primarily meant for large transactions. The minimum amount to be remitted through RTGS is 2 lakhs. There is no upper ceiling for RTGS transactions. Right. So this is one type of services, one type of service provided by the banks to the customers. So the minimum transfer of money is 2 lakhs. This is a perfect infinite system through system network. So this this facility is provided to the customers. So whenever the customer is needed to transfer the amount, a lot bigger amount, then the customer may follow this RTGS. That is the minimum, that is for minimum 2 lakhs amount is to be transferred from one person to another person or one place to another place without any problems. So that's why here we have some details, required details we need. So what are the features we required to do RTGS, right? Customers can remit any amount using RTGS. Yes, that's what we discussed. Customers aiming a remission of money through RTGS have to provide the following particulars. So those who are the customers are to interested to perform this type of activities, they have to provide these the following information. IFSC code. IFSC code means Indian Financial System Code of the beneficiary bank or branch. So the person, the other side person's IFSC code is needed. So here every branch will have one IFSC code. So that IFSC is Indian Financial System Code. Each and every bank will have a separate IFSC code. That is the beneficiary bank or branch. Full account number of the beneficiary, name of the beneficiary. These are the 3 details are required to perform this RTGS. So here what is needed? Name of the person is required. The other side person, who is the beneficiary from other side. So the beneficiary and the beneficiary's account name, account number, and the beneficiary branch or bank IFSC code. These are the minimum 3 details are required to perform this RTGS transactions. Next we see one more service, that is a National Electronic Funds Transfer. Here also RBI has given some definition. So NEFT, earlier RTGS, now NEFT, NEFT, National Electronic Funds Transfer. National Electronic Funds Transfer is a countrywide payment system providing one-to-one funds transfer. In this system, individuals, firms, and cooperatives can transfer funds electronically from any bank branch to any individual, firm, or cooperate having an account with any other bank branch in the country participating in the scheme. There is no limit, either minimum or maximum, on the amount of funds that could be transferred using NEFT. However, maximum amount per transaction is limited to 50,000 for cash based remittances and remittances to Nepal. It was launched in November 2005. It is launched in 2005. So this is NEFT. It is a nationwide electronic fund transfer. So nationwide individuals, nationwide firms, nationwide cooperative offices. If any funds transfer is required from one place to another, or one individual to another, or one firm to another firm, then they can go through this NEFT. Here there is no limit, maybe minimum, maybe maximum. So earlier in case of RTGS we discussed there is no maximum limit, but there is a minimum limit, that is minimum 2 lakhs. Whereas in case of NEFT there is no maximum and a minimum limit, but a maximum amount per transaction is limited to 50,000 only. So maximum amount is limited to 50,000 for cash based remittances and remittances to Nepal. So when our beside country Nepal, when we are transferring funds to Nepal, then it is restricted to 50,000. So here also we have advantages. The remitter need not to send physical check or demand draft to the beneficiary. So whatever the check we are interested to send the other side person, we are not sending physically. That is one aspect. Another one, the beneficiary does not need to visit his or her bank for depositing the papers. So the beneficiary does not need to visit the depositing the papers, because without a paper banks will not perform the activities. So that's why single paper is not required to submit with the bank card. The beneficiary need not to be worried regarding loss, theft of physical instruments, likelihood of encashment. So that's why physical instruments is not required. And credit verification of remittances sent via text or mails. So whatever the credit verification details are required, those are sent to the other side through text or emails. Almost real-time transfer of the funds to the beneficiary account in a secure manner. So this is a in secure manner, it will be transferred from one to another, one firm to another firm, one place to another place, one person to another person. Except to Nepal transactions, all the remaining there is no maximum and minimum limits. That is good. And one more, we see electronic banking, e-banking, the term which describes the transactions taking place among companies, organizations and individuals and their banking institutions. It was first conceptualized in the mid 1970, and some banks offered their customers electronic banking in 1985. The internet explosion in the late 1990s made people more comfortable with banking transactions over the web, and despite the dot-com crash, e-banking grew alongside the internet. Electronic banking is a term commonly used for the process by which a customer may perform banking transactions electronically without visiting a brick and mortar institution. E-banking comprises the systems that enable banks, customers, individuals, or businesses to check accounts, to business transactions, or fetch information on financial products and services through a public or private network, including the internet. Customers can avail e-banking services by using electronic devices such as personal computers, personal digital assistant, automated teller machines, and kiosk. So, e-banking, the customer need not go to the bank. The customer has to stay at home and can do their transactions with the banks with the help of their personal computer, laptop, or automated teller machines. So by using these are the gadgets are to be utilized by the customer. So this is the electronic banking system. Next, e-check. e-check E-checks or electronic checks are designed to accommodate the many individuals and entities that might prefer to pay on credit or through some mechanism other than cash. Once registered, a buyer can then contact sellers of goods and services to complete a transaction. The buyer sends a check to the seller for a certain amount of money. These checks may be sent using email or other methods. The electronic checks are modeled on paper checks, except that they are initiated electronically. So here also we have benefits. Well situated for clearing micropayments. They create a float, which is an important requirement of commerce. They can serve corporate markets. Firms can use them in more cost effective manner. So these are the benefits where we are using e-checks, electronic checks, and these are accommodated many individuals, right? So the next topic, I think this topic is continued in the next video class, because this is lengthy topic. We are already uh, mm, closing it. So this objectives of nationalization banks will be continued in the next video lesson. So in this video lesson we have gone through what is the core banking, what is the banking services are provided like RTGS, NEFT. So like that we have various services are provided by the bank, and the general utility services. So these are the this is the uh, information of is provided. So this This is the video lesson. It is continued in the next next class. That is the third video lesson. Thank you. Thank you. So this is the second video lesson of banking theory and practice. Thank you. We will, yes, so this is first unit only. This is become third year banking theory and practice, fifth semester subject. In that first this banking theory and practice paper having 5 units. In that first unit only we are learning. So this first unit already one video lesson we have completed. This is the second video lesson, and third at the end of third video lesson we will complete the introduction part. So thank you very much.